Hi, my name is Gerald Willison and I'm a Director of Distribution at Pinnacle Investment Management. Today we have Christopher Joye, CIO of Coolabah Capital, joining us. Chris, how are you?
Yeah, I'm good.
Good, thank you. Good to hear. Look, recently we saw Macquarie Bank come in and resurrect their hybrid. They relaunched a $400 million hybrid security offer during the height of the COVID crisis. Just wondering if we can gather your thoughts on this if possible.
Yeah, so these were the Macquarie Bank Capital Notes 2. The ASX ticker is MBL PB. These hybrids are rated by Standard & Poor's as BB+. So they actually sit in the high yield bucket, or on the cusp of high yield and investment grade. In fixed income, an investment grade bond is anything rated from BBB- through to AAA. Now, the Macquarie Bank hybrids, they generally trade in credit spread terms in line with the major banks curve. You might wonder why, because major bank hybrids are actually rated BBB- by S&P or investment grade. The Macquarie Bank hybrids are, I think, highly valued by investors because they're only 40% franked. They're not fully franked like major bank hybrids. And that then in turn means that they pay a higher unfranked cash spread. I think more broadly, Macquarie Bank is also regarded as a fifth pillar in bond markets. Their standalone credit profile is just one notch below the major banks, and their senior bonds are rated A+, which is also one notch below the major banks' AA- rating. So in the hybrid market on the ASX, we normally see them trade in line with the majors. Since the GFC, the average 5-year major bank hybrid spread above the bank bill swap rate has been about 300 to 330 basis points. Back in 2007, before the GFC, 5-year major bank hybrid spreads were only 125 basis points above the bank bill swap rate. Currently, they're around 415 bips. That is major bank spreads. So the MBL PB deal at 470 basis points above BBSW, which is the bank bill swap rate, was very attractive. That was a very large margin above the major bank curve at 415 bips. Grossed up for franking and including the bank bill rate, that represented an all-in yield of about 4.8% per annum. Now, these hybrids can be repaid at year 5.5, and they're automatically converted into Macquarie shares if that doesn't happen at year 8.5. When we look at Macquarie's balance sheet, we actually model up the probability of default on these securities. And in certain base case scenarios, we find a 10.5% probability of default. And if we assume a 0% recovery rate, so we actually assume that if they're not repaid after year 5.5, they get wiped out, then our minimum required credit spread, Gerald, is 221 basis points. So that's miles below the 470 Macquarie was offering. Another way of thinking about fair value is we can look at the actual default risk in the BB band where these hybrids sit, in that high yield, the higher rated class within the high yield category. And if we look at Moody's data between 1920 and 2016, generally the default risk has been for a 5 to 6 year security around 9 to 10%. That's the cumulative default rate. So that correlates with our model 10.5% PD, and then I guess validates the 221 basis point minimum spread we would want. As it turned out, they actually printed $500 million. The book demand was over 1.8 billion, and we think fair value is right now closer to that 400 basis point range, which implies that if this security were to trade down to the major bank curve, you would see the price of the security increase from $100 to circa 103. If the major bank curve compresses down like we think it will from circa 415 basis points today, closer to that 300 basis point mark where it has historically traded since the GFC, you'd see much larger capital gains again.
Perfect. Thank you, Chris. That's really great. Look, if anyone does want to get in contact with a member of the Pinnacle distribution team to discuss Coolabah Capital and any of their products, please feel free to get in contact with us. We'd be more than happy to organise a meeting with Chris and his team. Thank you.